top 5 dividend powerhouse ETFs that could make you a millionaire by retirement. Picture this. Jennifer, a 34-year-old teacher making $68,000 annually, just discovered a secret that Wall Street pros have been using for decades. It's not some complex trading strategy or risky crypto gamble. It's 5 simple ETFs that could transform her modest retirement savings into over $2.5 million by age 65. What if I told you that while everyone's panicking about market crashes and inflation, smart money is quietly building generational wealth with dividend-paying powerhouses that actually pay you to own them? Today, we're diving deep into the 5 Fidelity ETFs that combine explosive growth potential with rock-solid dividend income. This isn't your typical buy-and-hope strategy. This is about creating multiple income streams that grow stronger every single quarter. Welcome to Dividend Surge, where we turn market volatility into wealth-building opportunities. Let's start with the unsung hero that could literally save your portfolio during the next market meltdown. The Fidelity Total Bond ETF, FBND. Now, I know what you're thinking. Bonds? That's grandpa investing. But hold on to your seats, because this isn't your grandfather's boring bond fund. Picture this. It's 2008. Stocks are hemorrhaging 37%, and people are watching their retirement dreams evaporate. But here's the kicker. Quality bond funds like FBND actually went up during that nightmare. This fund serves as your portfolio shock absorber while paying you a juicy 4.54% dividend yield. That means every $10,000 invested generates $454 in annual passive income, money that hits your account like clockwork. But here's where FBND gets absolutely fascinating. This beast holds over 4,300 different debt securities, creating diversification that would be impossible for individual investors. We're talking government bonds for stability, corporate bonds for better returns, and even some high-yield bonds to juice up performance. With $19.65 billion in assets and an ultra-low 0.36% expense ratio, you're getting institutional-grade bond management at a fraction of traditional costs. Search Spark. Think of FBND as your portfolio's airbag. You hope you never need it, but when turbulence hits, you'll be grateful it's there, quietly paying you dividends the entire time. Now let's talk about the fund that's been quietly delivering millionaire-making returns while everyone else worries about market timing. The Fidelity Enhanced Large Cap Core ETF, FELC. This isn't just another index fund blindly buying everything in sight. This is like having a team of Wall Street quants working 24/7 to handpick the absolute best 200 companies in America. Get this, since inception, FELC has achieved an absolutely mind-blowing average annual return of 23.6%. Let me put that in perspective. If you had invested $10,000 when this fund launched, you'd be sitting pretty with significantly more wealth than if you just bought boring old S&P 500. The secret sauce? Computer-aided quantitative analysis that focuses on companies with explosive profit growth, expanding sales, and attractive valuations. We're talking about concentrated firepower with only 210 carefully selected holdings. This fund has $4.85 billion in assets, a rock-bottom 0.18% expense ratio, and delivered a stellar 16.57% return even in challenging market conditions. Search Spark. FELC is like having a crystal ball that identifies tomorrow's winners today. Except instead of magic, it uses hardcore data and decades of investment research to compound your wealth. Here's where things get exciting for dividend lovers. Imagine getting a $250 quarterly bonus check from blue-chip giants like Microsoft, JP Morgan, and Philip Morris International. That's the magic of the Fidelity High Dividend ETF, FDVV, your personal paycheck portfolio that grows stronger every quarter. This fund focuses laser-sharp on large and mid-cap dividend aristocrats, companies that don't just pay dividends, but actually increase their payments year after year. With $7.4 billion in assets and a mouth-watering 3.08% dividend yield, every $10,000 invested generates $3,080 in annual passive income that hits your account like clockwork. But here's where the compound magic happens. Dividend reinvestment. Every time these cash flow machines pay you dividends, instead of spending that money, you reinvest it to buy more shares. Those additional shares generate more dividends, which buy even more shares, creating this beautiful snowball effect that accelerates your wealth building exponentially. FDVV has delivered a solid 12.23% one-year return and an impressive 14.6% five-year annualized return, proving that income and growth can absolutely dance together in perfect harmony. Surge Spark. Think of FDVV as your personal money tree. It literally pays you to own pieces of America's most profitable companies while those dividends compound into retirement riches. Hold on to your hats, because we're about to dive into the fund that's captured the entire digital revolution. The Fidelity MSCI Information Technology Index ETF, FTEC. We're talking about a staggering 28.12% one-year return and a mind-melting 23% five-year average annual return. This isn't just buying random tech stocks. You're investing in artificial intelligence, cloud computing, semiconductor breakthroughs, and technologies that haven't even been invented yet. FTEC tracks approximately 300 technology companies, weighted toward mega-cap leaders like Apple, Microsoft, and NVIDIA. But here's why this concentration is actually brilliant. These aren't just tech companies. They're the companies literally shaping the future of human civilization. When you own FTC, you own pieces of the AI revolution, the cloud infrastructure powering global commerce, and the semiconductors enabling everything from smartphones to electric vehicles. With $28.7 billion in assets and an ultra-low 0.08% expense ratio, you're getting world-class technology exposure at a fraction of actively managed tech fund costs. Over the past decade, this fund has averaged annual returns that have turned modest monthly investments into life-changing wealth. Surge Spark. FTEC is like boarding a rocket ship to the future, except this rocket pays you to ride along while transforming your retirement dreams into digital reality. There's a whole world of wealth-building opportunities beyond U.S. borders, and the Fidelity Enhanced International ETF, FENI, captures it all while delivering truly impressive returns. Since inception, FENI has achieved a phenomenal average annual return of 22.25%. Here's why international diversification is absolutely critical for your retirement success. When U.S. markets struggle, international markets often thrive, and vice versa. This creates a natural hedge that reduces portfolio volatility while maintaining explosive growth potential. FENI invests in developed international markets, excluding the US and Canada, using sophisticated quantitative analysis to identify the best opportunities across multiple countries and currencies. The fund holds 318 world-class companies, including powerhouses like ASML, Novartis, and Nestle, companies you might never discover on your own, but represent incredible investment opportunities. With $3.54 billion in assets, a solid 2.62% dividend yield, and a crushing 19.44% one-year return, FENI provides essential geographic diversification while generating both income and capital appreciation. The fund's active management approach has historically outperformed passive international benchmarks. Surge Spark. FENI is your passport to global wealth. While others limit themselves to domestic opportunities, you're collecting profits from the world's most innovative companies across continents. Now, let's reveal exactly how Jennifer allocated her investments to potentially transform her modest savings into over $2.5 million by retirement. This strategy is surprisingly simple, but the results can be absolutely life-changing. Here's the magic formula. 30% goes into FBND for foundational stability and steady income generation. This provides crucial bond allocation that acts as portfolio ballast during market storms while generating compound income. 30% flows into FELC, serving as the primary growth engine with its impressive track record of large cap outperformance through active management. 15% gets allocated to FDVV, creating a personal dividend paycheck that grows larger every quarter and gets reinvested to accelerate compound growth. 10% goes into FTEC, providing exposure to the technology revolution and the highest growth potential in the portfolio. Finally, 15% lands in FENI, delivering international diversification and access to global growth opportunities that reduce U.S. market concentration risk. Surge Spark. This allocation is like assembling the Avengers of investing. Each fund has unique superpowers, but together they create an unstoppable wealth-building force. Here's the mathematics that will completely change how you think about retirement investing. Starting with just $25,000 and adding a modest $500 monthly to this 5-fund portfolio, Jennifer could realistically accumulate over $2.5 million in 30 years. Assuming these funds continue performing even remotely close to their historical averages. Let me break this down. $500 monthly is less than most people spend on dining out and entertainment. But invested consistently in these dividend powerhouses, it becomes the foundation of complete financial freedom. The compound effect is absolutely mind-blowing when you factor in dividend reinvestment across all 5 funds. The beauty of this strategy lies in perfect balance, growth potential with intelligent risk management. The bond allocation provides stability during equity downturns. Dividend stocks generate increasing income streams. Large cap core delivers consistent growth. Technology exposure captures innovation-driven returns. International components reduce concentration risk. These aren't just investments. They're your ticket to financial independence. Every month you delay starting this strategy costs you thousands in future wealth, because time is the most powerful force in investing. Surge Spark. Think of compound interest as your money working overtime while you sleep. Except it never asks for a raise, never takes sick days, and gets more productive every single year. Let's dive deeper into why FBND is the unshakable foundation of our dividend empire. This isn't just any bond fund. It's a masterclass in fixed income diversification that pays you while protecting your downside. The fund's tactical approach across government, corporate, and high-yield bonds creates multiple income streams that adjust to changing market conditions. When interest rates rise, the fund managers tactically shift allocations to capture higher yields. When credit spreads widen, they selectively add high-quality corporate bonds at attractive prices. What makes FBND absolutely crucial is its role during equity market crashes. While stock investors panic, bond fund holders collect steady dividends and often see capital appreciation as money flows to safety. The 4.54% current yield means you're getting paid handsomely for this stability. That's real money hitting your account quarterly. With over 4,300 holdings and professional active management, you're getting diversification and expertise that would be impossible to replicate individually. The 0.36% expense ratio is a fraction of what most bond mutual funds charge. Surge Spark. FBND is like having a financial bodyguard that not only protects your wealth, but pays you a salary for the privilege. FELC represents the evolution of index investing. All the benefits of diversification with the upside of active selection. This fund's 23.6% average annual return isn't luck. It's the result of sophisticated quantitative models identifying companies with superior growth characteristics. The computer-aided analysis focuses on fundamental metrics that historically predict outperformance, accelerating profit growth, expanding market share, improving operational efficiency, and attractive valuations relative to growth prospects. Only 210 companies make the cut from the entire large-cap universe. What's brilliant about FELC is that you're getting active management performance at passive fund costs. The 0.18% expense ratio is roughly 1/5 what traditional active managers charge, yet the results speak for themselves. The fund's $4.85 billion in assets provides plenty of liquidity, while the concentrated approach allows for meaningful outperformance. The 16.57% one-year return proves this strategy works across different market environments. When growth stocks surge, FELC captures the upside. When value becomes attractive, the quantitative models adjust accordingly. Surge Spark. FELC is like having a team of Wall Street analysts working exclusively for you. Except they never sleep, never have bad days, and their only job is making your retirement account bigger. FDVV isn't just about high current yields. It's about dividend growth that creates compound wealth over decades. The fund specifically targets dividend aristocrats and kings, companies with 10-plus-year track records of consecutive dividend increases. These aren't just any companies paying dividends. We're talking about businesses with such strong cash flow generation and competitive advantages that they can afford to increase shareholder payments even during economic downturns. Microsoft has increased dividends for 20-plus consecutive years. JP Morgan maintained dividend payments even during the 2008 financial crisis. The 3.08% current yield is just the starting point. These companies typically increase dividends by 5 to 10% annually, meaning your income stream grows faster than inflation while the underlying shares appreciate. Over 20 to 30 years, this creates a powerful compound effect where your original investment might be yielding 8 to 12% on cost. With approximately 120 holdings and reasonable diversification, FDVV provides broad exposure to dividend excellence without overconcentration. The fund's one-year return of 12.23% and five-year annualized return of 14.6% prove you don't sacrifice growth for income. Surge Spark. FDVV is like planting an orchard of money trees. Each year, the harvest gets bigger while the trees themselves become more valuable. FTEC captures the greatest wealth creation story of our lifetime, the digital transformation of human civilization. The fund's 28.12% one-year return and 23% five-year average reflect the massive profit potential when you own the companies driving global innovation. This isn't speculation. It's investing in businesses with trillion-dollar addressable markets. Cloud computing is still in early innings globally. Artificial intelligence applications are expanding exponentially. Semiconductor demand is accelerating with everything from data centers to electric vehicles requiring more processing power. The fund's heavy weighting toward mega-cap leaders like Apple, Microsoft, and Nvidia isn't a bug. It's a feature. These companies have competitive moats, massive cash generation, and the resources to dominate emerging technologies. When you own FTC, you own pieces of the companies that will define the next several decades. The 0.08% expense ratio means virtually all performance flows to shareholders. Over the past decade, technology has been the primary driver of wealth creation, and all indicators suggest this trend accelerates with AI, quantum computing, and biotech convergence. Surge Spark. FTEC is like owning shares in the future itself. Every technological breakthrough that changes the world makes your retirement account more valuable. FENI opens doors to wealth creation opportunities that most American investors never discover. The fund's 22.25% average annual return since inception proves that global diversification isn't just about risk reduction. It's about capturing superior returns from worldwide innovation. European companies lead in renewable energy, luxury goods, and pharmaceutical research. Asian companies dominate manufacturing efficiency and hardware innovation. Developed markets worldwide are pioneering solutions to global challenges like climate change and aging populations. The fund's active management approach adds real value through security selection and regional allocation. Rather than blindly buying everything, FENI's quantitative models identify companies with the best fundamental characteristics across multiple markets and currencies. Currency diversification provides additional protection against dollar weakness while exposing you to appreciation in stronger currencies. The 2.62% dividend yield adds steady income, while the 19.44% one-year return demonstrates the growth potential. With 318 holdings across developed international markets, you're getting exposure to world-class businesses that would be nearly impossible to research and purchase individually. Surge Spark. FENI is your golden ticket to global wealth. While others limit themselves to domestic opportunities, you're collecting profits from the world's best companies across continents. Here's exactly how to implement this million-dollar strategy starting today. Most employer 401k plans offer Fidelity funds, making implementation as simple as adjusting your allocation percentages. If your plan doesn't offer these specific funds, you can open an IRA with Fidelity directly and start building your 5-fund portfolio immediately. Start with whatever amount you can afford. Even $100 can begin your dividend surge journey. Set up automatic monthly contributions to take advantage of dollar-cost averaging, which reduces timing risk and ensures consistent investing regardless of market conditions. Enable dividend reinvestment for all positions to maximize compound growth. Every dividend payment automatically purchases additional shares, which generate more dividends, creating the snowball effect that builds massive wealth over time. Review and rebalance quarterly to maintain your target allocations. As different funds outperform, their weightings will drift from your intended percentages. Rebalancing forces you to sell high and buy low systematically. The key is consistency and patience. This isn't a get-rich-quick scheme. It's a get-rich-for-sure strategy that has worked for decades and will continue working for decades more. Surge Spark. Starting this strategy is like planting seeds in the most fertile investment soil on Earth. With time and consistency, those seeds grow into retirement redwoods. Don't let analysis paralysis cost you millions in retirement wealth. These 5 Fidelity ETFs represent decades of investment research and professional management, now available to you with the click of a button. The best time to plant a tree was 20 years ago, but the second best time is today. Your future self, the version of you sitting comfortably in retirement without financial stress. Well, thank you for the time you spent watching this video, and more importantly, for the action you take today. Which of these 5 dividend powerhouses excites you most? Are you currently invested in any of them, or are you starting from scratch? Drop your thoughts in the comments below. I read every single one and often respond with personalized advice. If you want me to analyze your current portfolio allocation, share your percentages in the comments, and I'll give you honest feedback. If this video helped clarify your retirement strategy, smash that subscribe button and ring the notification bell, because I'm constantly researching and sharing strategies like this that can transform your financial future. Remember, building wealth isn't about getting rich quick. It's about getting rich for sure. And these 5 Fidelity ETFs are your roadmap to retirement success. Surge Spark. Your dividend surge journey starts with a single click. Make today the day you chose financial freedom over financial worry.